Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. So in today's episode, we're going to be talking about the top 3 stocks to own during this 2020 crash. So one of the first things you have to understand is we're going to be breaking this down in 3 parts. We're going to have a low risk, medium risk, and then a pretty risky stock to get into. We're going to be talking about all of that. But before we jump into the episode, we are doing the AirPods giveaway. So it's super simple on how you enter. All you have to do is like the video, subscribe to my channel, and then like my Facebook page, Farr. Once you guys do that, you guys will be entered in for the giveaway. We're going to be doing the giveaway sometime around next week or so. So let's jump into the episode. Roll the intro. Let's go. Bam! So today was actually one of the first days in honestly a little long time that we had the market push back. Right now the total stock market's up around 6% or so. So some of these stocks, most of them, if not all of them, are going to be up on the day. So before we jump in and actually look at all of the top 3 stocks that I honestly see value in, let's talk about how to find stocks that see some sort of growth potential and you guys can see some sort of, future for them. The very first thing that I look at is this simple rule: the trend is your friend. So when you think of that rule, it's honestly very simple. As long as we have this upward trend in a stock, the future predictions is it's going to continue to follow that trend. The trend is your friend. Most of the time when we get a market sell-off, we'll have this beautiful trend line and then this nasty sell-off point. When we see that nasty sell-off point, if you guys are smart and you guys know that great investor by the name of Warren Buffett. So Warren Buffett once said, be greedy when others are fearful and be fearful when others are greedy. So right now everybody is honestly fearful. So this is the time to be greedy and get those stocks. So now the next thing. So now the second thing you guys have to understand is that all, if not most, stocks have fallen over 33%. Right now the entire market's down 33% or so. Yeah, today it is up a little bit, but you have to understand you have to risk money to make money. And I'm not talking about, just gambling or something like that. When it comes with investing in stocks, you guys should be investing in stocks that you guys don't have to look at day to day. You can look at maybe once a week, 2 times a week, and be confident in that company and realize, okay, I don't have to check this every single day because you know the company is strong. So that's why I like to invest in like blue chip stocks. So blue chip stocks are like companies that are worth billions or trillions of dollars. Most of these companies do have a large amount of money just sitting in cash for this. A lot of companies realize recessions happen, so that saves some money. So when, the stock falls or whatever happens, customers kind of stop buying for a little bit. We have this capital to kind of back up the company, and that's always great. That's why I like to look at, Disney is a great stock, Apple, Ford, all of these great companies have a lot of cash on hand. Now, really the third and final thing that I do look for, and this one is not, ideal, but I like to look for it, and I know a lot of other people like to look for it. It's dividends. Dividends are a great way to get cash flow and to get like a little side income. The average millionaire has anywhere from 6 to 7 passive income streams. Dividends are one of the best passive income streams because you don't have to work for it. All you have to do is just put your money out there and collect that cash. So honestly, that's pretty much how I find stocks that I see value in, stocks that I see some sort of growth in. Obviously, I do have to believe in the company, so I always like to kind of look at where do I see this company in, 30 years? Where do I see it in 15 years? Something along those lines. Why do you think Tesla is worth so much money? Is because of that very statement. A lot of people invest in Tesla, not for right now, but what for the future holds of that company. So now let's talk about the top 3 stocks that I see value in. We're going to be talking about the first one, which is less risky, and then move our way all the way to the riskiest stock ever. So now the very first one is the S&P 500 ETF. Now there's a couple of them. There's SPY, VU, but I personally like SPY just because I think it's a little better. So really how these work, now imagine if you wanted to invest in like, Apple, Amazon, Google. Now obviously if you were to go out and buy all these different stocks, it would cost you like $4,000 or $5,000. Now imagine if you had this ETF, you can compress it all into partial shares. So you might own half of a share of Ford, half of a share of, Apple, full share of, Disney. So they break it down between the top 500 companies on the market. That's why it's called the S&P 500. S&P 500. There is also a variety of other classes, S&P 100, S&P 1000. You can just look them up and you can honestly see them. It's not too complicated to find them. Now the reason why I like these is, one, they offer that great dividend. Two, they have a historical return anywhere from 10 to 12%. And if you're getting in at these little dips, then it is a great way. So the 2021 market, when the market recovers, you sit back, relax, and you enjoy those profits, man. And I think that's one of the best ways that investors and newcomers can make money in this falling market. Now, the second stock is the one and only Disney. Right now, Disney fell to $85, recently trading at $140. So it's almost down 50%. Disney's one of the strongest companies out there. It's been through almost every single recession. Not to mention they just closed their theme parks, which is going to make the entire stock fall even more. So as long as you keep getting in on these dips, it's going to be a great way for when the market recovers. People start going back to all these theme parks. People are continuing to use the Disney Plus service, and I think it's a great way to honestly make some money. And not to mention they do own Pixar, Marvel, Star Wars, and a whole bunch of other smaller companies. So obviously this one's going to be in the medium risk category, just because obviously it does carry a little more risk compared to an ETF. Now the third stock that I see value in, now this one's going to be more of the risky stocks. This is ticker symbol CCL, also known as Carnival Cruise Line. Now, one of the main reasons why I'm actually looking at this stock to purchase, I do own a couple of shares of it right now. One, they offer a great dividend. Two, the stock fell from $70 all the way to $9. So obviously if this stock recovers when this whole virus thing is done, that stock's going to easily push back up to 60 or 50 bucks within a year. Now you can sit back, relax, and enjoy the profits and enjoy a nice little dividend. If you get in around $9, that dividend is going to be right around 16%. So that is a lot. Obviously, the risk of this is they just ask the government for some money, because there could be a possible bailout, just because it's a cruise line and people aren't going on cruises due to that virus. Not to mention, they are using those ships as hospitals, which is honestly kind of cool that they're continuing to kind of keep their name out there. I think that's why they haven't really fallen on their face yet. So obviously with this stock, you're risking that $9 per share to make upwards of $70. I think the reward is greater than the risk. So you always have to look at what you call asymmetrical risk reward. You always want to try to risk $1 to make $2. That's the ideal, scenario when it comes with investing. You never want to risk $1 to make $1. You never want to risk $1 to make 50 cents. You always want to risk money to, if not double your account. So if that stock recovers, you're going to push back 7 times your money. Right there, it's a great way to kind of risk your money. You're in a decent company. Not to mention when this whole virus thing, stops coming about, people are gonna start going back on cruises, whether it's a year or two. They're gonna start going. It's just a matter of waiting, in my personal opinion. Now, obviously, there's a lot of honorable mentions. One that I see some sort of value in is Penn. I do own a lot of Penn. There is Ford. Ford cut their dividend, but that stock fell all the way to $5. If not $4.30, I think I saw it trading at $3. There's Apple, and there's obviously a lot of stocks that have fallen. One of the things you have to make sure is when you're looking at stocks, you have to make sure they did have a good trend before this fall. So that is it. I hope you guys enjoyed the episode, and if you guys did, drop a huge subscribe down below. We'll see you guys tomorrow in another episode. If you guys have any questions, make sure you guys go ahead and ask them. If you guys want to enter for the giveaway, you guys know how to enter. It's super simple. It's not too complicated. So that is it though. I hope you guys enjoyed the episode, and if you guys did, drop a huge subscribe. Do what you guys do. We'll see you guys tomorrow in another episode, guys. Take care. Have a good one. Bye.